Hey everyone, Couch Investor back with another video for today. So in today's video, we're going to talk about Opendoor. A lot of you have been asking me to cover this company. So here it is. We're going to see if it could be a potential 10x investment in the next couple of years. We're going to look at what the company actually does, their financials, etc. So stay tuned for that. But before I do so, I want to thank everyone because I think by the time this video gets out, we have reached 5,000 subscribers. So thank you very much. And if you haven't subscribed yet and you want to join this channel, hit that subscribe button. And if you like these videos, leave an early thumbs up as it really helps me out grow the channel and get my videos out there. So without further ado, let's dive into this. Right, so Opendoor is another one of those companies that got listed on the stock market via a SPAC, special purpose acquisition company. We've seen that with a lot of other companies this year, but this time it has been actually facilitated by the one and the only Chamath. I'm not going to pronounce his last name because I'm probably going to pronounce it wrong. So if you don't know who Chamath is, he's one of the early executives in Facebook, major investor in Slack and co-owner of the Golden State Warriors. So they are, in my opinion, in pretty good hands. So you might ask yourself, you don't know what is Opendoor and what they're actually doing. So here's a little clip that will explain that.
Selling your home the traditional way can be a long process. You have to set the price, second guess the price, prep the house, paint the house, recarpet the house, declutter the house. It's really cluttered. Decat smell the house, fix this, replace that, toss these, get rid of those, list the house, pick up the toys, bake some cookies, have an open house, let strangers rummage through your closets.
Oh, yes.
Wait for an offer, freak out that you overpriced it, have another open house, get interrupted during dinner.
Hello.
Leave for a showing, get an offer, lose the offer, get another offer, haggle, accept the offer, have inspections, fix more stuff, go into escrow, hope they don't bail on the offer, close a month later, and then realize you could have had the same offer from Opendoor months ago. So sell your house to Opendoor and skip all the stress and uncertainty. Get your free offer in 48 hours at opendoor.com.
So in short, what they are doing, they're basically facilitating the way for you to sell and actually buy houses nowadays, because, well, you know, everything is becoming digital, and we're going to see it right here. They actually compare themselves to other markets out there. So basically, early stages of the digital transformation in real estate, they're putting themselves in a market that is less than 1% being digitalized or being online. We can see Amazon, Uber, Carvana, all of those companies have a larger market share, let's say market leaders in their respected fields. And I agree with them, real estate is an industry that is ripe for disruption. Of course, there are lots of companies out there that are trying to do the same, lots of companies that are trying to digitalize the whole real estate experience. We're going to talk about that in a bit, but let's go and look at the team that Opendoor actually has, which is a pretty good team if you ask me. So as we can see here, their team are pretty experienced. You have people that have been working for Amazon, Airbnb, Square, Coursera, Netflix, Capital One, Twitter, and many, many more. So if you had doubts about the team, that it's maybe an unexperienced team, that shouldn't be a problem right now, because as we've just seen, pretty experienced, pretty good. And it's always good to see and know the team that is behind the company, so you can actually have more confidence investing in a company that has, well, executives with pretty good experience, as we've just seen, people that have been working in huge companies before, instead of having people with no track record, etc. All right, so now you might ask yourself, so how does Opendoor actually make an offer for your house? Because that's their main thing right now, is you want to sell your house, they can actually buy your house, and then obviously they will flip it and sell it further down the line. So how do they make an offer? Basically, you go list your house, you ask for an offer. What do? They compare your house, your piece of real estate, to other houses in your neighborhood. So they compare to other sold listings, other houses that resemble your house. So let's say you have a 3-bedroom apartment, you have a garage, etc., a little garden, you live next to a school. All of that is taken into consideration for the offer that they're going to make. If they see that there's a sold listing out there of an apartment that is smaller than yours, but maybe they have a garden, they take that into consideration as well. Maybe they'll try and change something in your house, in your apartment, etc. Everything is taken into consideration, and then they will make obviously the offer, and they'll come physically to your house as well. Now, there's also some additional services that they are going to offer, and they're offering as well, like open houses. Not everybody likes to stay at home and get open houses each and every day. So basically with Opendoor, what you can do is install a digital lock. Basically somebody comes via the app and scans a code or whatever, or calls Opendoor, gets a code to get into the house. You don't always need to be there for a open house, which in my opinion is pretty cool and pretty neat right now, especially now with the pandemic. Not everyone wants to be in the same apartment with a lot of other people. So moving into that digital transition and adding those services, I think that's a huge advantage. Maybe other companies are doing this as well, but for Opendoor right now, this is a plus for me on the overall scale. So how big is Opendoor? So let's see where they started, where they are right now, and where they think they will be going in the next coming year. All right, so their first 6 markets reached 2.7 billion run rate revenue in Q1 2020. That's basically in 6 markets, and they had 3.2% market share. Now fast forward to today, they are in 21 markets. They have a 2% market share. Now you might ask yourself, how can they go into more markets and have less market share? Well, basically when you go to a bigger audience, you might get less market share, but hopefully they can increase that number moving forward. But they reached now 5 billion run rate revenue in Q1 2020. And they say that if they continue with their current playbook, they could reach $50 billion in revenue, reach 100 markets and a 4% market share. Now, obviously all of that will take some time, but at least they have a clear roadmap going forward. And it's nice to see that they can actually execute that as well. All right, so now let's go and look into the financials. So as we can see, they have $10 billion worth of homes sold, 80,000 homeowners served, a revenue of 4.7 last year. It's a bit less right now. And they've sold almost 19,000 homes in all of 2019. Now, as we can see here, in 2023, they are expecting to have almost $10 billion in revenue, way higher margins of 539 million. And then they say that they could be profitable by only 0.1%, but that's after obviously taxes, depreciation and amortization. So basically it doesn't take into consideration everything, which means that they don't expect to be fully profitable by 2023. But again, for growth stocks and growth companies, as long as they keep on growing each and every year, profitability will probably come sooner rather than later. But right now it's not something that we should focus on. Obviously it's nice that they could be profitable sooner rather than later, but as long as they keep on growing and won't stagnate for a while, profitability will come naturally moving forward. All right, and lastly, their competition. Obviously, you all know Zillow, one of the main competitors, Redfin, Compass, and many, many more. Basically, Zillow, in my opinion, is their biggest competitors. Yes, Opendoor actually reported higher revenues than all of their competitors. Zillow actually reported revenue last year of around about $2.7 billion, but they reported their Q3 earnings, I think a couple of days ago, of over $650 million. So they are also increasing their revenue each and every year. Redfin, way smaller. Compass, also a bit smaller, but not directly a competitor, but still in all of that real estate market. There are many, many more competitors. So it will be very interesting to see what is going to happen moving forward. Again, competition is healthy. It keeps companies innovating and getting better and better. So to conclude, is Opendoor a potential 10x? Is it worth your investment? Is it worth my investment? As of now, I'm not invested in Opendoor. I'm actually not really looking to enter or to open a position in Opendoor. Yes, I feel the real estate market is ripe for disruption. I believe companies like Zillow and Opendoor will probably still be here in the next 10 years. Will they be bigger? Probably. Will they be 10x bigger? Probably not, but you never know. You never know what might happen. I can only say that Opendoor is in very good hands. Chamath is somebody that the whole world of finance is actually very familiar with. So in my opinion, yes, you could probably 5x your investment, but as of now, for me, I don't think I will be buying any Opendoor stock. Again, I'm positive that this stock will keep on growing each and every year, but for now, I will just be watching this stock. And that will be it for this video. If you liked it, consider leaving a thumbs up. If you have any questions, comments, leave it down in the comments below. And if you haven't subscribed yet to this channel, we just surpassed 5,000 subscribers, so hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.